Yeah, well, another story that is not all wine and roses, as Julie would say. We're also watching shares of VF Corp. That is the maker, of course, of Timberland and North Face, after the company revised its full-year outlook for 2023 due to lower-than-expected results in the second quarter. And I made a joke off camera, but to me, it holds true. Whenever you see a company come out, I think, with a 5-year growth target inside of a stock market that is completely melting down, it just usually suggests that near term there's going to be a lot of pressure in this business. Now, VF Corp has some incredibly strong brands, but look, that guidance was taken down, close to 40 cents, Julie, compared to prior estimates. Challenging quarter and not a good look, I think, ahead of those Nike earnings that come later in the week, because these companies, by and large, if I'm going to buy North Face black just hoodie, next to it is probably something from Nike.
Look, well, for Nike, they've been trying to move out of some of those partnerships where they're in the same space as a Vans, North Face, Timberland, and Dickies brands. And what it does signal, though, is even with a Nike exit from some of those retail partnerships on the wholesale side of their business, for what VF Corporation is now talking about, for Vans, North Face, Timberland, Dickies, they're also still trying to go to direct-to-consumer. And so if you're seeing both a hit on the wholesale side and a hit on the direct-to-consumer side, it's essentially going to shape up to exactly what VF Corporation is pointing out here across those brands, saying that they see the economic uncertainties persist, actively addressing challenges within their business. And I think that this is just going to be more of that investment story in their existing customer base, while they're not sure exactly where the marketing spend is going to be able to continue to go forward to acquire new customers. What does that mean for partnerships? I've seen Dickies and everything from Walmart growing up to Target now too. And if you're looking at the type of consumer you're going after and also thinking about where they're pulling back in some of their discretionary spendings, do they lean into a North Face or Timberland, or do they say, you know what, Target's got some of the same stuff too? Perhaps VF Corporation can capitalize on that, but I'd really be hard-pressed to believe that right now, with a 5-year growth plan, there's anything to really be optimistic about.
Yeah, and I'll just mention, too, it's a very good point, and something to, I think, look out for this earnings season. VF Corp noting their guidance that they just lowered for fiscal year 2023 doesn't account for no significant worsening in global inflation rates and consumer sentiment. So theoretically, if we get a next leg lower in this economy, we do enter a full-blown recession. Are companies like a VF Corp and even industrial companies, you name it, are they prepared to lower again? And I think that's what you're seeing in the markets, just that macro, just that economic and profit uncertainty for companies.
Except you're not seeing it in VF Corp today. The shares are not down very much at all. They're already down 52% this year. And if you look at the longer term targets, they're actually not too bad in terms of the growth they're expecting in the various brands. Maybe that's cushioning the blow. I'll have to look more at the commentary around it.
I just remain skeptical when the company says in its long-term strategic growth brand that it's going to find and amplify consumer trends. Some of the companies that have been able to do this well have already created those consumer trends themselves, and based on some of the tailwinds that they've seen either in culture or something that they've been able to home grow themselves and build out fanfare around. And so if a company's telling me, yeah, we're just going to go out in there and find it, it's not going to just fall on the doorstep.